Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe Nikruto. I'm here with
Hey, I'm Dan Hussey, everybody.
Dan Hussey. Today, we've got some stuff to cover as usual. We're going to be digging deep technically into the grain and livestock markets. We'll be especially wanting to take a look at soybeans. Interesting week for soybeans, to say the very least. We'll try to update viewers on how best to navigate these types of market movements. Before we begin, as always, keep in mind everything we talk about here today, everything that involves futures trading or trading in these markets does involve risk of loss and should only be engaged in if it's suitable for your specific risk situation. Also, before we get started, we want to let you know that if you're interested in hearing about grain market price action and fundamentals daily, you can sign up for the Zaner Ag Hedge hotline hosted by expert market strategist Ted Seifert. Totally free, gives you a chance to connect with us personally if you have any specific questions about the markets or agricultural commodities in general. If you are interested in learning more about how this price action works and how to make it work for you, it is a perfect way to take a first step. Link is in the description below to sign up for that. Totally free, zero commitment. Dan, I don't know about you, but I find myself calling that hotline from time to time as well, right?
Yeah, no, it is a great way to just catch up, particularly on those days when, Ted's out and about in the field. He's still checking in, and Joe and I can get, hear what he has to say and get his expert opinion. Not that it completely dictates what we do, but we do make a team effort in terms of trying to build that narrative of what we're anticipating for a crop here. Because when all three of us are having that same discussion and nitpicking, and don't get me wrong, we play devil's advocate with each other, but it's a great way to catch up every day. 5-10 minutes in that call he gives you, great way to catch up and hear what happened.
He certainly does a great job, no doubt about it. Thanks to Ted. Dan,
thanks, Ted.
What's going on out there? Beautiful weather after last night's storm here in our neck of the woods, wouldn't you say?
It's funny. It's like that storm landed just east of me, completely missed us. We were anticipating it, dropping golf ball size hail on us. But then a few towns over, Elmhurst, is really where that hit near me. But today, 85, pushing 90 and sunny. I already went for a 10K run or 5K run, trying to get myself back in shape and using this hot weather to condition myself a little bit.
Same thing for me, just with Busch Light. I have been looking at some Busch Lights, thinking if I could just have 3 or 4 or 5 of those out there in that 85-degree weather, that would be terrific.
However, right there with you.
No rest for the wicked. Got to visit with family today. Today's my mom's birthday. Happy birthday to my mother.
Happy birthday, Mrs. Nikruto.
Appreciate, you're right. Appreciate everything that she does for us. Terrific. I'm excited to visit with her today, and then got a list of things to do tomorrow as long as your arm, and you got some really long arms, Dan. So no rest for the wicked here. Would offer an update. The truck radiator extracted the old broken one, put in the new fresh one. The temperature gauge says I did an okay job. Man, did it take forever, Dan. Hours and hours and hours, just because I wouldn't buy the right tool, but did get it done. So,
and isn't that funny? You just couldn't get the right tool. Do you have a specific tool too that just gets completely lost all the time? Like it just, every time you get one, it goes into the abyss, like a specific lug nut or something?
All of them. Yeah. I spend more time hunting down tools than I do actually wrenching on stuff.
Sure.
But certainly an interesting project on the march toward 400,000 miles.
That's incredible right there.
Crossed 377 today, 3777 all the way across. So we'll see if we land at 400,000.
You're almost to that point where, like, when you go to get new oil, it won't even have like the mileage of your car anymore. It'll be like, no, sorry, dude. Like you might just need a new engine.
Just good luck. That's what it says. They don't even bother to put the mileage on it. Just good luck. Yeah. I saw a
vehicle,
question mark. Yeah. I saw a vehicle sitting in the middle of the Dan Ryan today, and everybody was having to move around a stalled vehicle.
Oh, no.
Right smack dab in the middle of the Dan. And you feel so bad for those people, and you think, there but for the grace of God. And I'm sure that when this truck decides to stop running, it will be right there in the middle of the Dan Ryan. So hopefully they get those people out of there safely and quickly, because I'm guessing that one day I'll be one of those people.
Oh, don't say it, Joe. Say it ain't so.
We'll see. Take it back, right? Don't put it in the universe. So what I don't know, what WASD on Monday and caught some folks flat-footed with some of those carry out numbers, right?
Yeah. I mean,
A little
even I don't
smaller.
want to say caught me flat-footed, but like right, like you said, little smaller than anticipated, and we'll see how the market continues to digest that. It feels like soybeans was the only place really mattered.
Global supply not burdensome in terms of corn and beans, but then immediately price action was pretty decent, especially in beans.
Mm-hmm.
But in the ensuing days, in the last couple of days here, we've seen some really, especially in beans. July beans opened the week 1064, high was 1082, low 1046. Last trade I saw was 1050. So what I'm
Okay.
saying is that if you look at the daily chart, you think, oh, this is
Right.
terrible, but we're only down 1 3/4 on the week. Funds came into the day, maybe
Yeah, and
long
this is
3,000
I actually
contracts.
have the weekly chart up right now for the
Doesn't look
folks at
bad at
home.
all, right?
No, that
Doesn't
looks
look
like
bad at all.
wow. Maybe you broke out of something and you're back to test it, broken resistance as support. This is actually the quintessential what I refer to as the kiss your mother setup, folks. You run out the door, you got to run back to kiss your mom goodbye before, if you hold really this 18-day moving or 18-week moving average route, but the lows of last week or even the lows of this week, you hold and we just start higher next week. There's a reason Joe and I are mentioning like, oh, it's not that bad, right?
That and below there, 100, 200-day moving average, 1046, 1047.
Yeah, there we
Question
go.
I had that I wrote here, gonna hold? I guess we're gonna show up Sunday, Monday, Tuesday and find out, right?
Mm-hmm.
The stage is set for high drama, in my opinion, in the bean market. Wouldn't you think?
I agree. I get rid of these two little trunk lines there. I tend to agree, right? You're above the spaghetti bowl of moving averages, right? And this is really the first time, since last January that we've been, pushing above and trying to stay there, right? They don't always just rip through and go and never look back. We have a tendency when we start to get above these levels to want to come back and test them as we start to move higher, right? And we're kind of seeing that. This is progression in its ugliest form, if you will. But like Joe said, we're still up in the week. A couple of days of kind of nasty pullback, broke back below that 18-day moving average, which really this 18-day, this red line really hasn't been like respected as a level entirely. But you know what has is that 200-day and that 100-day. And boy, we're above both of them and holding them still as support. So that's my clinging of hope here in the short term, right? We hold here. We head to the highs of this week around 1080. I think next stop $11, maybe even higher. And I think it'll be quickly, right? Because this is this instance where I like to use the old saying, the further you pull back the rubber band, the further it can fly. And if we found support right here, yeah, momentum should take us higher.
And the reason for this pulling rubber band, bean oil opened the week, July bean oil 48.79, high was 52.62, low 47.63. Last trade I saw was 48.93. That was still up on the week, 0.36 in a market that was limit down yesterday, right? For I don't know how many of the
Right.
contracts. Funds long an estimated 62,000 contracts there coming into today. We'll see what the CFTC says this afternoon, but even with that, so we'd be remiss if we didn't mention bean oil sells off based on a rumor that the EPA recommendation for blending standards will be lower than the coalition recommendation. The coalition recommendation was a number that was in the fives, 5.6, I think. Got to fact check me on that. I don't have that number in front of me, but the whisper number was in the fours, 4.5. Bean oil market very concerned about that, as evidenced by the immediate negative reaction in the overnight and the ensuing limit down move on Thursday, right? Thursday, was it Thursday? Was Thursday,
Yeah,
right?
yeah, just yesterday,
Limit
yeah.
down. And so
Moving down right into that 18-day moving average, to which then we effectively moved below today and really tried to get back to. But, it's a question, are we pulling back to test broken support now as resistance in the very short term? That's a scary thing. But you take a step back on this chart, 48 to 50, this has been resistance going back to 2024. So is this the breakout above this major level? Hey, let's look at that weekly chart again for the bean oil. Same idea here. You can see that long-term support was support, became resistance. And is it now breaking and becoming support again for a move back up to greener, higher pastures. I don't know.
So
See,
we're not surprised to see it pull back,
no,
considering the level that the levels, right, or the level that has been here. We've seen many times. You break out above that, market's going to need to pull back and think about it for a minute.
yes,
So here again, being complex, set up for high drama. Meal, not so much drama. July meal opened the week 296.80, high 299.50, low trade there 291.20. Last trade we saw was 291.90, closed near the lows, down 220 on the week. Drama in the meal is that they have a near record or record short position, 110,000 contracts. What does that mean in the context of this sweeping downside bar here today? You had a rally yesterday as they unwound the oil meal spreads, and looks like today that they couldn't get that short meal back on fast enough, right?
yeah, and I just got to point out this loss of momentum and kind of rounding, slow turning bottom. We're clearly finding when a market does this into a big level, $3 mark, right? But like when we do this into levels like this, it makes me feel like, okay, we're really just sitting on some kind of big support, right? This is where there's value down here, right? Somebody's like, no, I'll take it all, when we get down to these levels and doesn't care about buying it, ever again, right? They just let it come back down to that price. Makes you wonder though, if we're starting to see that shift when we saw, in bean oil, a break out above its big level that we couldn't get out above, with bean meal kind of still in the dirts, but slowly turning. It makes me wonder if we aren't, shifting and changing the dynamic here a little bit of what drives the bean complex in terms of intermarketing year demand.
Can you educate me on that as well, please? Let me offer this question. So,
Sure.
or offer this. Yeah, I think this is a question. So, what we're seeing here is bean oil rallying in anticipation of an increase in demand, and I think that you're seeing this in the crush numbers, right? Help me understand the
Yes.
crush, and in terms of the United States, not necessarily the premier provider of the value added products, right? We'll sell you the beans. But now Crush seems to indicate that we are beginning to embrace the opportunity to help folks import or to help the market get these value added products from us. Is it possible that meal is simply marketing that idea and that we're saying, okay, listen, we're taking our own beans, we're processing them aggressively. We know where the oil is going to go. We'd like to help you take a look at why you should be importing meal from the United States. Does that make sense?
It does, right? You got to find if oil demand is starting to drive crush, you're going to start to lose some value from the meal side because unless you put more animals on feed globally, unless you find more demand for meal, you just have a byproduct that is continuing to stockpile as you brave the other side of the crush, which is in this case the oil, or the market
Crush
demands it.
crush numbers were at the very high end of expectations, weren't they?
Right. And we keep pushing that bounds and there's still room to grow. And competitively speaking, I think, we would like to try to take some of that value add back away from China and Argentina as well, because that crush capacity is an entire, right? It's another cog in the wheel and another value add that the US, we can add to our own GDP rather than trying to just exporting the soybeans. And by the way, we also then control the domestic price a lot more than and when we're less reliant on international demand, which, by the way, crush both ethanol and soybean, crush domestically, has the capacity to do that. Or there's a future capacity with, initiatives in ethanol and what do you call it? Sustainable aviation fuel.
Sure.
If we
Sure,
could just get
absolutely.
there, just get across the finish line.
Just a couple more
Do
weeks.
it.
All you got to do is wait a few more weeks, or maybe a few more months, or could be just another year or two. And you and I were talking about that before we came on camera. Is that in my mind, this seems to be something that if you were in the Trump administration, maybe you would want to iron this out quickly, as
Yep.
they receive tremendous support from the agricultural community, and maybe now is the time for them to now is the time for them to show some of the support they receive from the ag community. Now it's time for them to show the ag community some support
The
in terms of
support, right?
getting this thing done.
Reciprocate to your
At least
constituents.
some, yeah, at least some clarity. I mean, if it is going to be a four number, let's just get the idea out there so that people can make decisions. I don't know. It seems
Mhm.
2 weeks. I thought I saw somebody from ADM talking about the idea that this will be resolved in the next couple of weeks. So hopefully we'll be sitting here soon talking about what is really going to happen.
With this, right, at the speed at which this administration can move when it wants to, it will not let anything in the way of something as easy as an ag compromise or some kind of ag deal if it's necessary. At least I'm hopeful of that. So we'll see,
Yeah.
right? We don't know, but it just makes a lot of sense. And if we're getting game theory out, the path of least resistance for a lot of situations right now, there's pretty, in my opinion, pretty clear-cut win-win type situation here for both the American farmer, the Trump administration, as well as just the U.S. economy as a whole. Like we have a really rare opportunity to really create domestic demand in a place, it's just convincing the market otherwise.
At a time when we may need it very much.
Yeah, right. Right before potential trade war. And we made it right. I think we're on the kind of personally, I think we might be on the way out of the trade war kind of fiasco, if you will. I think we're generally, through to greener pastures. I think you're starting to see that with equity indices and other places. Like there's just not as much weight on the shoulders of many markets right now. But agriculture and maybe even soybeans, where it should be most palpable, it's been mixed, right? Soybean shows that almost fearless kind of bid right now, even in the way of corn and wheat, still kind of hunting out new lows. It'll be interesting to see where we go into the end of harvest.
How about let's try to find something good to say about this. We opened the week 525
Never be good again.
Never, ever. High was 533.5, low 506.25. Last trade 525, down 3.25 for the week. That is another massive short position for wheat, short an estimated 114,000 contracts. See where it stands today. But there was some talk that these low prices are uncovering international interest, international buyers for wheat. And that may be, we may not be looking at a chart that's languishing in the low fives here for very long. I don't see it yet. When I look at that chart, that's a wheat chart that you have.
Why? This is a daily July Chicago wheat chart that's up. Yeah, I mean, I felt for a while here we were losing that momentum into lows. And then the thing you don't want to see happen, which is kind of that lower bounding trend line we keep bouncing from, we started to break it. That's a sign of acceleration lower, right? Like the more damage is now being done and the market's unable to pick itself back up. We're no longer the beach ball they couldn't keep underwater and it just kind of kept popping up. Now, we're underwater, right? Every buyer from August through April of this year is now underwater, right? And I do think there's hope, but I'm waiting for that big reaction higher. I want to see this market break back above this upward downward sloping trend line, above the 18-day, above the 100-day, 55-day, and this box on the chart, which is simply just the lows that was support now has been resistance. When we get back above that level, I'm excited about wheat again above 560, for a move to $6 to $7 again, right? I think the big short covering could occur. But while we're below all these technical levels, each one of these lines on the chart above is going to be potential resistance, or it should be thought of, right, as potential resistance until it's not. So watching that closely, but I think that fund position, that's going to be the canary in the coal mine. Watch that. As we start to see that roll, cover out, market anticipate and go the other way, that's going to be the fuel for the fire if wheat wants to reverse.
Absolutely. That chart says you've got a lot of work to do, but the way those moving averages are stretched out can result. And I'm going to make sure that I say this right because you don't want the tail wagging the dog, right? But when you get those moving averages stretched out like that, market does have to move a little bit to bump into them. And so don't be surprised to see some outsized moves here coming up. Certainly there's been no lack of volatility in these markets, but upside volatility in wheat could guy might want to be on his toes, if you do see some moves here and maybe not sit on the hands as we come into these. You're starting harvest in a lot of places here already, and we'll see how that plays out.
Yep, absolutely.
And how about June cattle? Opened the week 217.15. The high was 218.62.5. Low 210.62.5. Last trade I saw was 212.22.5. That was down 245. Notable that after making a new high on Wednesday, we closed at the bottom of the day's range, well lower, and then follow through. And then follow through on Thursday.
Yeah.
Today we kind of checked up, right? But
checked up, 18-day moving average inside day, right?
Held.
Exactly.
It's kind of
exactly
holding,
what
right?
Today was a checkup. Yeah. Great way of putting it.
Funds may be bailing. I don't see how at least at this stage, right? And certainly the
Right.
cattle market can move well away from cash prices. But you had cash trade yesterday that kind of came in as expected. That cash trade did not reflect the weakness in the futures market. And so in my mind, I wonder if cash doesn't capitulate, how low can futures go, right?
Yeah. And I think that we both agree that there's probably some limit to that downside if cash just doesn't want to respond. And okay, quick pullback into the 18-day moving average, kind of back points we came. Next big levels of support I'm looking at are this 207 to 205 area, these old highs from March. And then, of course, the old summertime or the old highs of the year, I should say, back there from January as well. It's around 200. But a lot of other stuff has to happen. Cash would need to break significantly for us to get down there. And it's just not happening yet.
Be interesting to see. Looks like the box beef numbers are also holding in there rather well. 2 days worth of price action. Kind of hard to see that immediately show up, but everybody will be watching very carefully next week.
You got to wonder too. I mean, we're going into grill season. It's
I was
Memorial
just
Day
going to say
weekend.
that.
You know,
I was just going to say, yep.
Before we know it, it's going to be 4th of July, man. I mean, steaks are going to be on grills across America here, and so are burgers. I mean, if we're up here and there's still demand, we just got to get as many. The only way it's coming down is more animals, bigger animals, and then that's a big if too. Well, hey, you want to get some corn and meal demand? There you go.
Yeah, and
Get some
where are you
animals
gonna
on
get 'em?
feed, people. No, I know.
Going to be getting them the feeder cattle for August, right? Opened the week at 303.60. The high was 307.67 and a half. Low 295.10. The last trade 297.60 down. And I say this in all sincerity, only down 270 on the week. You look at the 2 days worth of price action, you think, oh man, this feeder cattle market, a lot of folks calling an end to this uptrend, but you're only down 270 on the week. And you got a lot of room. See, here's another market where those moving averages are so spread out.
Exactly. And let's look at last April 2023, I should say. In the weekly, we went parabolic as well. You know, look, you might have a little short-term top, maybe a couple of weeks of downside, but you know, after that parabolic move in April through May of 2023, it's still found its way from the 240 handle up to 260s right before eventually topping. And even then, like, we really haven't pulled back on the weekly since then. Now we've gone parabolically higher above that level. So, okay, you know, how far down can we go? At 290? You know, where there's that open weekly gap. Could we? I don't know. It doesn't seem that far off, but there seems to be a lot of support down there. 55-day moving average, 289, as well as this old high, which is effectively where I think we've pulled back and we've been finding support in the last 24 hours, back in that 295 area. Back and fill kind of price action after just getting a little too lofty, I suppose. This top, though, this kind of island reversal top, though, is a quintessential reversal 3-candle structure. Gap up, loss of momentum, outside day lower, gap down. I mean, if this is the top, they'll be writing textbooks about this setup.
You make a good point. That island top is a very powerful chart formation. And if we cannot, so Dan, I have difficulty seeing, because I'm old, what those numbers are. What is that gap on the right-hand side of that island?
That's the highs of yesterday, in fact, which are up at 380. The lows of the prior day were 301.32. So, yeah, you got a little gap here right around the 301 area.
Little gap. Yeah, little
gap, but it's an island.
Gap nonetheless.
Island.
That's an island. Yeah.
It's an island.
So every day that we go without filling that gap on that island is a day that this market gets heavier and heavier from a technical perspective. Am I right?
Yeah, it's absolutely right. And the more you flag down here below a level like the 18-day moving average, could put some more pressure. We fall back into this old range. You know, the market's already proven to us, once you get back below 92, there's not much in the way back down into 275. So, not saying it's going there yet, but like, it's something to be definitely keep, you know, have your eyes peeled, watch, stay nimble, because this market has gotten frothy. There's still reasons to think it could find new highs, but that there's also, you can make a very strong case for why people are calling for that top at this, or looking for that top and hunting it out, right? And hey, if you are a cattle producer back below and a rancher back below the 18-day moving average is usually a pretty good sign to think about getting some hedging done, just in case we get these big flush outs or it is the top. That could be a good just daily hedging indicator for when to get a hedge on and when not to, or what have you. But good prices, good prices. But are they
And the last
sustainable?
time we saw one of these violent breaks was rumored to be around some sort of LRP insurance situation. I can't even speak to that
Is that
intelligently, but
back in April, a month ago?
there was something going on there that had an impact on the market. Somebody was caught in a position or some such.
Hmm.
A lot of rumors. I never exactly understood what that break was about, but only to say that if you look at this chart, it's very instructive in terms of if the cattle and feeder cattle market decide that they're going to fall apart, there can be some
Hmm.
distance traveled, no doubt about it.
Hmm. Absolutely.
Dan,
Well,
where does that leave us? I think that for a week post WASD and then this kind of volatile price action, we may have covered this as best we can, huh?
yeah, I don't know if there's much else you can say. Hopefully we see some of the reversal in the beans continue to stick, right? Corn and wheat, hopefully they kind of get out of their own way. We can find a reason to be excited about them again. But yeah, everything was kind of status quo with last week. Not much has changed, I guess. You could say beans actually back above a little bit of a range is something new to kind of to sink our teeth into, or to have discussed this week. But what can you do? We can only deal with what the market gave us.
For sure, for sure. How about
Well,
how about question of the week?
beat me to it.
Do you prefer watching comedy or drama?
Comedy all day long. What kind of question is this?
What kind of question is this? Dan says to
What kind of
producer
question is
Carter.
this?
Uh,
Comedies all day long. And don't
yeah,
get me wrong, I like a good drama, good suspense, maybe some action in there too. But we're asking a couple guys to choose between drama and comedy. I think I know which way we're going to lean.
yeah. I don't know. I like to cozy up on the couch with my
Good,
cats
good
and
Jane
watch
Austen
a good
novel, and
get watch a good rom com. On a Friday. I
yeah,
I don't even think my television knows how to play any rom coms. You know what I mean? Like if it's not
you
Jack
have
Reacher,
Netflix.
no, I don't. I don't really have.
Well,
I got the
look at
Amazon,
you.
right? So if it's
Oh,
not Jack Reacher punching, I think Jack Reacher punching somebody in the face, that can be kind of romantic. You know what I mean? That breaking people's arms or whatever. I think that's the last thing I
in
watch.
some circles, Joe.
Yeah, right. I think that's the last thing I watch. But I certainly would have to say that if I was going to watch something, if we were going to set up to watch something, I would probably prefer to watch some comedy myself. Yep. What are you
Yeah,
going to do?
I think so. I think so too. I feel her is in the same boat, but I don't want
I'll
to speak
bet you're right
for
about that.
producer.
Dan, this weather is going to turn. My phone app says that we get after today, we're in the 60s for a good week. What are you going
Uh,
to do to take advantage of the rest of the day here?
I
Get
mean,
those children outside in the sun, get them some vitamin
yeah,
D.
we got one of our oldest. He's got a, whatever you call it, like a sports thing he'll go to this afternoon. So we're going to go and have some fun there. But otherwise, yeah, it's going to be a nice weekend of enjoying the good weather while we can.
Heck yeah, good for you. I hope you guys have a great weekend.
Yeah, you too, Joe. Well, thanks for listening to the Zaner Market Cast today. If you need more because you just can't get enough, you can follow us on Facebook at the Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have a question you'd like it answered right here on the air, you can follow the link in the description of the comment section to get that answered right here for you. Thanks again, and be sure to like, comment, and follow to not miss a beat. And we'll be back with you as price action develops. Take care, everyone, and have
Have
a
a great
great
weekend,
weekend.
everybody.